Pantheon AI presents China's Gold Hoard, GE Aerospace Boom, and Market Moves. Good morning, everyone. Welcome to the PAI Morning Briefing. I'm John, your host from Pantheon AI, and today is July 17th, 2025. Hope you're all ready for an insightful journey through the markets, because we're going to break down the latest developments, trends, and news stories that are really shaping the investing landscape.
Absolutely, John. Grab that coffee, settle in, because we've got a lot to cover. It's looking like a fascinating day already. So where should we kick things off?
Let's dive right into a quick market overview, shall we? This morning, the major U.S. indexes are actually showing some modest upward movement. The S&P 500, for instance, is trading at approximately 6,264 points, which is up about 0.15% from its previous close.
Okay, so a gentle nudge upwards there. What about the Dow then?
Yeah, exactly. The Dow Jones Industrial Average is hovering around 44,255 points, registering an increase of about 0.23%. And the Nasdaq Composite? It's quietly edged higher, sitting at nearly 20,731 points, with gains measured at a modest 0.06%.
And the Russell 2000, which is always interesting to watch for those smaller cap companies, is up by roughly 0.63%. So even the lower end of the market seems to be catching some positive momentum, which is a good sign, right?
It really is. But then, if we shift gears to the digital asset front, it's a bit of a mixed bag. Bitcoin is lounging around the 117,823 mark, having experienced a slight dip of about 0.76%.
Right, so a slight pullback for Bitcoin, but Ethereum, on the other hand, seems to be enjoying a more positive run. It's trading near 3,418 and showing a healthy increase of approximately 1.3% today. So traditional indexes gently rising, but crypto giving us some mixed signals. What do you make of that, John?
Well, it means we're witnessing a cautiously optimistic market environment, wouldn't you say? There's enough positive movement to suggest investors are taking measured risks, but that slight volatility in digital assets definitely hints that caution remains. I often joke, Sarah, that the markets behave like your night owl friend, sometimes charming and full of potential, and other times just a bit unpredictable and cranky. Today's numbers certainly invite us to stay alert and prepared.
That's a great analogy, John. It really captures the essence. And when we delve deeper into major market trends, that cautious optimism combined with strategic positioning seems to be the overarching theme. We're seeing it in those incremental gains in traditional indexes, suggesting investors are looking for safe havens amid ongoing uncertainties.
Yeah, those micro changes really stand out. It's like seasoned investors are carefully balancing their portfolios, taking advantage of modest positive momentum while still hedging against potential volatility. It's a smart play.
Exactly, and across sectors, there's evidence that global uncertainties are being factored into trading decisions. Think about all the chatter around geopolitical shifts and changes in monetary policy. They're subtly influencing investor behavior. It's almost as if the market is whispering, enjoy the sunshine while it lasts, but don't forget your umbrella. These small percentage gains often come from careful speculation, not just sheer exuberance.
That's a really good point, Sarah. It's about being prepared. Now let's switch gears and delve into some of the key news stories that are making waves today and what they mean for the broader market.
Sounds good. What's first on the list?
Our first major story relates to reports coming out of China. There's considerable buzz that China may be secretly stockpiling gold. Multiple reports suggest their central bank has been actively purchasing physical gold for at least the past 3 years, and speculation is rife they could be ramping it up even further. What's the big picture here? It's seen as part of a broader strategy to diversify China's reserves and reduce its reliance on the U.S. dollar. As many investors know, gold is a classic hedge against currency fluctuations and geopolitical uncertainties. This could have significant implications for global financial markets, signaling a shift in the geopolitical economic landscape. Can you imagine finding out your favorite restaurant has been sneaking extra dessert into your order? Unexpected, but very deliberate.
That's a fantastic analogy, John, and it highlights just how strategic this move is. It's not just about accumulating gold. It's about a fundamental shift. And actually, that ties into our next story, which highlights the evolving role of gold in today's economic climate. We're hearing a lot about, quote, 5 reasons why President Trump's second term has been so good for gold, with industry experts noting that gold is rapidly transitioning into a core asset class within diversified portfolios. It's been nearly 3 months since gold hit record highs, crossing the 3,500 per ounce mark, thanks to a confluence of factors like economic policy shifts, global uncertainties, and inflation expectations. It's like that last-minute dash for the exit when the final call is made, a rush driven by both strategic planning and a dash of urgency.
Wow, that's a powerful surge for gold. And speaking of powerful surges, we have an exciting development in the aerospace sector. GE Aerospace, a name that's had its ups and downs, is experiencing what many are calling a renaissance. Their stock has soared to a 25-year high following a series of blowout earnings that far exceeded expectations. Not only did they report stellar quarterly numbers, but they also raised their full-year outlook. This has really ignited excitement among investors and analysts because it signals that the aerospace and defense sector is bouncing back strongly. It's like GE Aerospace went from being the quiet kid in the back of the class to scoring the winning goal in the championship match, leaving both competitors and skeptics in awe.
That's an incredible turnaround for them, and it really does torque up the performance of related sectors you'd imagine. And on the domestic front, another series of reports is shining the spotlight on retail sales. We've seen a snapback in June, primarily driven by a reduction in tariffs that had been weighing on consumer sentiment. With tariffs dialed down by the White House, consumers felt a bit of economic relief, which translated into more spending on cars, clothes, DIY projects, and dining out. It's a great example of how policy decisions create ripple effects, right down to our local neighborhood shopping centers. It makes you wonder, John, how often does a tariff change lead to you finding a sale on your favorite pair of jeans?
Exactly. It's that direct impact that's so fascinating. And then there's the great ETF boom of 2025, which many have dubbed the hottest investing topic of the year. The explosion of exchange-traded funds has been remarkable, driven by a record influx of new cash, innovative leveraged and inverse products, and increasing interest from hedge funds and private equity firms. The sheer volume and variety have transformed the investment landscape, making it both accessible and complex.
It really has, hasn't it? It's like ETFs are this incredible buffet where investors can pick a little bit of everything without having to cook up a selection process on their own. Diversification and ease of access are truly driving unprecedented levels of activity there. And, as we run through these critical stories, it's worth noting that many of these headlines are making multiple appearances across various news sources. China's gold purchases, the retail sales rebound, they've both been highlighted in more than one report today.
That's a really important observation, Sarah. When the same story is told time and again, it's as if the market is using a loudspeaker to ensure every investor is aware that significant shifts could be on the horizon. It underscores their importance. Now let's shift gears completely to a detailed sector analysis.
Okay, so beyond the headlines, what's happening in specific sectors? In the technology space, even without dramatic headline news specifically tied to tech giants this morning, that ETF boom is indirectly reinforcing the strength in tech investment vehicles. Investors are reallocating funds towards ETFs with significant tech components, anticipating continued innovations and digital transformation. It's like if technology were a party, everyone's RSVPing yes, because they don't want to miss the epic dance of innovation and growth.
That's a great way to put it, Sarah. Everyone wants to be at that party. And turning to the energy sector, global demands paired with fluctuating oil prices and a reinvigorated discourse on climate change policies have really put additional focus on renewable energy and unconventional drilling technologies. We're seeing strategic alignment of traditional energy companies with emerging green tech initiatives, which is drawing a lot of investor interest.
Yeah, while the march towards sustainable energy can sometimes feel like a slow waltz, the steady integration of these practices is likely to accelerate as governmental and regulatory frameworks continue to support cleaner energy transitions. It's a long marathon race, slow to start, but steadily picking up pace as the finish line gets closer.
That's true, and the financial sector itself is also coming under the microscope. With monetary policies remaining in a state of flux globally, banks and financial institutions have been refining their risk assessments and diversifying their asset portfolios. That cautious optimism we saw in the overall market is mirrored here by more dynamic approaches to lending, investments, and risk management. It feels a bit like watching an experienced poker player. The stakes are high, everything is calculated, and each move is designed to either secure a win or mitigate potential losses.
That's a perfect description, John. And aerospace, as we touched upon earlier with the GE Aerospace earnings report, is another sector seeing renewed vigor. Those record highs reached by GE Aerospace's stock are making investors really sit up and take notice. The sector's rebound is being fueled by technological advancements and increased global demand for innovative aviation solutions. This isn't just about catching up. It's about fundamentally reimagining what flight and space exploration can look like. It's like a blockbuster sequel that's actually exceeding expectations.
Definitely. It's delivering a narrative where each chapter is more thrilling than the last. And on the consumer side, that retail sector rebound, thanks to the easing of tariffs, isn't just about increased sales numbers. It's about the resilience of American consumers. With spending increasing on everyday items, this sector is proving that, even in uncertain economic times, the basics of consumer behavior remain an essential component of overall economic health. It's almost like when your favorite small diner starts offering a discount. It signals that even in challenging times, people find ways to enjoy the pleasures of everyday life.
That's a great analogy, John. It shows that underlying strength. But what about global implications? These trends aren't isolated to the U.S. market. China's moves to pile up physical gold, for instance, are having ripple effects on currency markets worldwide. If one nation starts de-emphasizing the U.S. dollar, what does that mean for global trade and monetary policy? And the burgeoning ETF market is attracting investors from all corners of the globe, creating a level of interconnectedness that blurs traditional lines between regional markets. It's a reminder that any economic tremor in one part of the world quickly finds its way to our doorstep.
That's so true, Sarah. We're all connected. And taking a step back for expert insights and predictions, many analysts are cautiously optimistic. They anticipate that the modest advances in the major indexes, along with the subtle shifts in risk allocation across sectors, are likely to continue in the near term. However, they also warn of potential volatility on the horizon, particularly in the cryptocurrency space and sectors vulnerable to regulatory and geopolitical changes. It's that classic case of expect the unexpected, right?
Yeah, it's like today's market conditions are a well-choreographed dance, where every step and misstep can influence the overall performance. And that brings up a question I always like to ask our listeners. How do you balance the need for risk with the desire to capitalize on tiny incremental gains? That question, I suspect, will be on many minds as the day unfolds.
That's a fantastic question, Sarah. It's something we all grapple with. So let's take a moment to reflect on what these news stories and market trends might mean for your portfolios and investment decisions. With China's strategic positioning in gold, we might see a strengthening of precious metals over time, particularly as global uncertainties persist. On the other hand, the renewed vibrancy in the aerospace sector, spearheaded by companies like GE Aerospace, suggests that innovation in technology and defense could offer exciting opportunities for growth. And don't underestimate the power of consumer confidence. The retail rebound not only confirms that our consumers are spending, but also hints at underlying economic resilience.
And, I always like to sprinkle a bit of humor into these analyses. You might say that while the markets are like a roller coaster in a theme park, it's important to remember that even a slight dip can be the setup for an exhilarating climb. As investors, we have to strap in, enjoy the ride, and occasionally laugh at the absurdity of it all. Because if we can't find humor in decline percentages and earnings reports, then what's the point of deciphering these financial puzzles day after day?
That's a perfect way to look at it, Sarah. It really is about perspective. The sector analysis we've just covered serves as a microcosm of the broader financial ecosystem. In technology, energy, finance, aerospace, and consumer goods, subtle shifts are taking shape that will determine both short-term performance and long-term trajectories. Global trends like China's gold accumulation, policy shifts in the United States, and the soaring popularity of ETFs are signaling that while the short term might involve cautious steps, the long-term landscape is ripe for transformation.
Absolutely. Global implications suggest that investors need to remain nimble and well-informed. With global supply chains, international policy decisions, and emerging markets playing pivotal roles, the landscape is anything but static. So, bringing our conversation full circle, what are some of the key takeaways from today's briefing?
Well, first, the overall market environment is cautiously optimistic, with major indexes posting positive, albeit modest, gains. Second, while traditional markets are showing steady progress, the cryptocurrency sphere continues to inject some volatility into the mix. And finally, on the news front, we have several compelling stories, from China's calculated moves in precious metals and bullish narratives surrounding gold, to blockbuster earnings in aerospace and the surprising resurgence of retail sales following tariff adjustments.
And let's not forget that massive ETF boom that's reshaping how investors approach diversification in this dynamic era. For those of you wondering what to do next, consider reviewing your portfolio with an eye for both risk management and growth opportunities. Ask yourself, am I prepared for potential volatility in digital assets while capitalizing on solid moves in traditional sectors?
That's key. It may be useful to reevaluate your exposure to sectors like aerospace, or even take a closer look at diversified ETFs that span multiple categories. And remember, these decisions should be guided by both experience and the timely insights coming from thought leaders and AI tools alike.
Before we wrap up, I want to leave you with a few questions to ponder. How might China's secretive gold stockpiling influence the global dominance of the US dollar in the coming years? Can the recent upward trends in aerospace and retail sectors serve as harbingers for a broader economic turnaround? And what role will the extraordinary boom in ETFs play in the evolution of both institutional and retail investing? We invite you to mull these over and even share your thoughts on our discussion board or through your preferred social channel. Your insights might just spark the next big conversation in market analysis.
That's a great call to action, Sarah. In closing, I'd like to thank you for spending your morning with us at the Pantheon AI Morning Briefing. I hope today's discussion has provided you with valuable insights and sparked new ideas for your investment strategies. Remember, Pantheon AI is here as your information co-pilot, ready to guide you through these financial labyrinths. And as always, learning shouldn't feel like a full-time job.
Exactly. Join us again tomorrow for another deep dive into the day's market movements, trends, and key stories. And as always, feel free to reach out with any questions or thoughts you might have for our AI co-pilot. Until then, take care, stay curious, and keep those portfolios nimble. Have a fantastic day ahead. Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.